Hello trader, today we'll be focusing on how to build your own trading strategy based on all you've learned through the pre-intermediate phase. And if you are just seeing this video for the very first time, please check the description box and you will get a link that will take you to the first video of the pre-intermediate phase. And when you are done with the first video, check the description box of that first video. You will get the link to the next video. And also, if you are new to forex trading, you can also get the link to the beginner phase on the description box of this current video. And so on. Keep searching the description box of all the video, then you will get the link that will take you through the beginner phase, the pre-intermediate phase, and to this very point. Yes. First of all, let's begin with all you need to build a working system before we delve into building your own trading strategy from the scratch. If you follow this step-by-step guide I am about to show you, you'll be able to build mastery, make profit, and build a successful trading career. Number one is trading foundation, two, trading strategy, or you can call it technical analysis. Number three is trading rules and guidelines. These are the rules and guidelines you follow. Then number four is risk management. Number five, trade management. And number six, trading psychology. Let's begin with the foundation. Just like every other building, before you build a house, you need to set the foundation right. The same applies to trading. If the foundation is not right, the building will collapse in few years. When building a trading system, you need to establish the following foundations, and we begin with traded instrument. Instrument means the pair you will be focusing on. How many pair would you be trading? If you trade more than one, two, or three pair, in my opinion, you are not doing something right. For me, I think it is best to just focus on two to three pair and try to gain mastery on these pairs, knowing how they move, having a mental picture of how they act, and you will be glad you did it. Basically, technical trading is you having a mental picture of how the market behaves. You get it? That's what technical trading is all about. You having a mental picture of how the market behaves. And you might want to focus on any pair of your choice, such as SAU, USD. You should know all this pair already if you've gone through the beginner phase. SAU, USD, GBP, JPY, Euro, USD, GBP, USD, CAD, CHF, NZD, SHEP, and BTC, USD, and more of them. You can choose to trade any pair, trade them for a very long time, understand their move, and then you do comparison on the one you understand better, and then focus on just one or two, and you are good to go. Remember, technical analysis is based on you having a mental picture of how the market reacts, and you have to repeat that same mental picture over and over again. That gives you an edge over the market. And number two is trading session. You have to decide which trading session you want to focus on, either the London session, the New York session, or ASEAN session. Choosing a trading session depends on, number one, the type of trader that you are. You should already be aware of this if you've gone through the beginner phase, and your time zone, which is your location, your time zone, because we have various time zones, and your trading strategy. You get to understand it, so you get to how to build your own strategy from scratch, and the pair you trade. These four are what gives you the edge to pick a good trading session you want to focus on. You have to decide what type of trader you are. Do you want to be a swing trader, a day trader, or a scalper? As a swing trader, you can take a trade anytime and any day. While as a day trader, you can decide to trade the whole session, or you can focus on just one or two sessions based on your time zone, your trading session, and the pair you wish to trade. based on your time zone, in the sense that there are some sessions that falls when you are already at sleep or when you are busy, while some falls on when you are awake or you are free for trading. So you should focus more on such session where you are already awake or when you won't be much busy and you will be free to trade. You get it? Yes. Based on your trading strategy, there are some trading strategy that do well in some session. You just have to figure it out and focus on such session. Based on the pair you trade, this comes in two ways. Yes, this comes in two ways. There are some pair you trade that thrives more on when they are open. For example, the GBP JPY will buy more during and sell more during the ASIA session. And the SAU USD will give you that momentum move during the New York session when the US region is active. And if the news release during that session tends to favor the US dollar, then we will get more of sell. And if it's against the US dollar, then we will get more of buy. That is how the trading session affect the pair you trade. And also your strategy might be doing well in Asia session when trading USD card. This is when the region for USD card are already at sleep and you will get better momentum. But still, your strategy do well in Asia session. What then do you do is to focus on Asia session and you are good to go. Since that session gives you your good risk to reward, you are good to go. Trade that USD card in that section. We are still on the foundation. You know, the foundation really needs to be dealt with. You get it? Number three, daily routine. Note, there is a life aside from trading. You need to schedule time for trading and know when you want to trade. Schedule time for family, schedule time for friends, and schedule time to have fun. Time for trading. During trading hour, you have to put out time for analysis, time for journaling, and time to study. Time to study, which is time to backtest your strategy for clarity and to learn new things. For me, I put out weekends for time to study, which is Saturday and Sundays to study, backtest my strategy, see how effective it is, and learn new things from the chart, and then we are good to go. For journaling, you have to set out 20 or 10 minutes at the end of each day just to journal your trade that day. Or this is what you do. Immediately you trigger your entry. First of all, journal the reason why you placed that trade, the reason why you took that trade. Journal it, and at the end of the trade, also journal what you saw that made you close the trade, or the trade got to your TP, and your behavior during the trade. You get it? Yes. Now we've done with the foundation, and now we want to focus on trading strategy, which is technical analysis. This is you following a particular pattern that you've backtested, knowing your SYZ, and using the same method over and over again. When you are done analyzing the market, you see your setup, your SYZ, which are your entry confidence, you trade. And if you don't see your SYZ, which are your entry confidence, you don't trade. When you follow this pattern, trading only your SYZ, this means you will be having high probability trades and you won't be trading randomly and all the time. It is best to simplify your trading strategy, and I will show you how to do that when we get to the chart. From top-down analysis to your entry time frame based on the type of trader that you are. Strategy is more of I want to see this and this and this. If this and this forms, then I will take the trade. And if this and this is not formed, then I won't take the trade. Remember, technical analysis is simply having a mental picture of how the market acts. Then you react towards the way the market acts. You get it? Yes. Now, trading rules and guidelines. We are done with trading strategy. Remember, trading strategy is based on your SYZ. You just want to see your SYZ, and You've already had the mental picture of this your SYZ. And if your SYZ did not form, you are not trading. You will patiently wait until you see that your SYZ. Okay, that takes us to what? Trading rules and guidelines. These are the rules based on your personality that you set to follow before, during, and after trading hour to limit mistakes and avoid being hurt. My own trading guideline might not work for you because my person might be different from your person. I might be that greedy guy and you are not that greedy guy. You get it? So if I'm that grading guy, things that I want to see and things I want to be will be different from how the things you want to see and the way you behave. You get it? Yes. Now we will consider the following trading rules or guidelines. Number one, news trading. Do you want to be a news trader? You ask that. For me, I don't trade news regularly. I only trade news when I have some amount of money that I'm willing to let go. That's just how I do trade news. Now, trading plan. You ask yourself, do you want trade news? Yes or no? And then that leads to what? Your trading plan. The trading plan contains all you will be doing for that, which are your entry conflicts. Remember, your entry conflicts are your SYZ you want to see before taking that trade and your exit confluence. This might be your take profit, your stop loss, or the reaction of the market you want to see before closing that trade manually. Maybe it can be candlestick reaction, chart pattern, you tend to close that trade either in small loss or in little profit. It's part of trading. Yes, it's part of trading. You don't have to hit your TP all the time. Yes, and it also don't have to eat your stop loss all the time. Now, that takes us to your risk appetite. How much are you willing to risk monthly, weekly, or daily? You should put all this in place based on your trade capital. And now, your stop loss level, your stop loss level. How many pip stop loss limit do you want to use per trade? For me, because I'm a day trader and sometimes I do swing, but majority of the time I am a day trader. So for me, as a day trader, I do when trading currency pairs, I use 30 pips as my stop loss limit, 30 pips. That is the highest I can go for currency pair. But when trading SEU USD, the highest limit I can go is 60 pips stop loss when trading gold. You understand? Yeah. Check the description box to get a trading plan template and edit it to fit your personality and your trading style. Remember, it's all about your person. My person might be different from you. So all you just have to do when you get the trading plan, edit it to suit your own person. That is how it works. Now, risk management. Yes, risk management. You don't have to play with risk management. It contributes 30% to a working system. We are not talking about working strategy. This whole thing, we are focusing on a working system. So risk management contributes 30% to a working system. Under risk management, we have win rates, then we have risk to reward ratio, and we have risk per trade. Win rate. It is necessary that you know your strategy win rate and then risk to reward ratio. It is your win rate that tells you the kind of risk to reward trade you should get into. Risk to reward means when you reach $10 per trade, you should be targeting 20 to make 30 or 40 or $20 from that trade. And this is based on your strategy win rate. For me, I will advise you to go for 1 to 3 per trade in the sense that if you reach $10, you are aiming to make $30 for that trade. For example, if your strategy win rate is 40%, let's work with 40% win rate. 40%, 40% win rate. So this means if you take 10 trade, you should lose 6 trade and 4 will go in your favor, right? Yes. Okay, let's say, okay, for that 4 trade, you make what, $30 each, which is 1 to 3 per trade. You risk $10 to make $30. So it should be 30 times 4. 30 times 4 for that 4 trade that goes in your favor, which you would now have $120. $120 for that trade. And you lost 6 trade, which is, remember, you reached $6 per trade, which is $10. Sorry, you reach $10 per trade, which is six trade times $10. 6 trade times $10 equals to $60. So there is it. And now you have to subtract $60 from 120, which means 60 minus, okay, let's say 120 minus $60. You have 120 in profit already, which is the first 4 trade goes in your favor. 120 in profit already minus $60, which is the other 6 trade that goes against you, equals to $60, which means you are still running in profit. $60 in profit. You get it? Yeah. So that's the good thing about risk to reward. So focus on getting good risk to reward per trade. But this comes with you knowing your strategy win rate. Is your strategy win rate 30%, 40%, or 60%? You understand? So this comes with you knowing your strategy win rate. That's how trading works. Now, this takes us to trade management. Basically, this is you managing your running trade. It is just you knowing how you are going to manage your running trade. That is what trade management is all about. Are you going to hold till it hits your take profit or stop loss? Or do you want to break even immediately you see market break structure in your direction? Or you want to secure some profit, which is known as securing partial profit? These should be factored in your trade management. Know this, put them into your trade management, and this takes us to psychology. Trading psychology consists of how you see yourself as a trader. Do you see yourself as a consistent, profitable trader or a losing trader? And how you feel before, during, and after the trades. So as a trader, even before you become profitable, see yourself as a profitable trader. Tell yourself every day that you are a profitable trader. Tell yourself when you wake up in the morning, speak to yourself that you are a profitable trader. This holds 60% in your trading journey to become a consistent, profitable trader. You see, trading psychology. Remember, we said risk management holds 30%. Now, trading psychology holds 60%, now left with 10%. So the 10% is just your trading strategy. So the psychology is basically how you behave, how you react, and how you see yourself. Always see yourself as a profitable trader, even when you are in a losing streak. Tell yourself that you are a profitable trader. Tell yourself, because you will always become who you speak to yourself, and you always become how you see yourself. We consider the following to build a good trading psychology. Number one, your trading plan. Stick to your trading plan. And your trading plan consists of everything we've been talking about. Your risk management, how much are you willing to risk per trade? And patient in taking trades. Wait until you see your SYZ, your entry conflicts before taking trade. Follow your trading plan makes trading a lot more stress-free. You get it? Yes. Number two, your trade capital. Your trading capital should not be the money set aside for something important. No, it shouldn't be. With the mindset that if you lost the money, you are going to die. or not eat for some days, or something bad will happen to you. Yes, because when you have such trading capital, like trade money that is meant for something, when you put that money into trading, you will be trading off emotion, and then you will be scared to take good trades and eventually take wrong trades, and this will mess with your psychology. Even if we cherish our capital, but it shouldn't be money that we can't afford to lose. You get it? All traders, we all cherish our trading capital, but there are money that we are willing to let go. You understand? So not just that we want to let all the money go, but to split the money into different phases. This is the amount I am willing to rate per trade for this day. You understand? And per trade for the next trade, and per trade for the next, you understand, for the next day, and so on. But it does not mean that we won't get loss. We'll get loss, but our profit is way bigger than our loss. That is what makes us a profitable trader. Number three, treat trading as a side hustle. No matter how full or how loaded you are with money, it is best to treat trading as a side hustle till you become a successful trader to some certain level. Not just you are successful in 1 month. No, when you are successful to some certain level, you've made tons of money from trading. That is when you now say, okay, I am a full-time trader. Because you need money to fuel trading. You have to have another job, a full-time job where you get money from to fuel trading as a side also. When your capital is all you have, you will be trading with fear, I tell you. When that your trade capital is all you have, you will be trading with fear. Number four, trade journaling. When you journal your trade, you will have data to fall back to whenever you meet a roadblock. Roadblock means when you are in a losing streak. These past trades are just to track if you are still following your trading plan, or if there is anything you are doing wrong that has led to this roadblock, which means that has led to you having this consistent loss. When you fall back to this trade which you've journal, you will be able to figure things out, the things you are doing wrong and the things you need to work on. It's also to refine your trading strategy by looking over past trade to see patterns that wins and the one that you had loss on, and to figure out the ones you will focus more on. That is all you need to build a good trading psychology. You get it? So always journal your trade so you have something to fall back to. We have covered all you need to build a good working system. We started from the foundation and then the strategy, and then we move to the rules and guidelines you have to follow as you proceed. Then we move to risk management, trade management, and we seal it up with what? Trading psychology. Trading psychology, I call it the Oga Patapata of them all. The reason why I said it is the Oga of them all is because you see how it moves. It involves from your trading plan to your trading capital and how you have to treat trading in order to help build your psychology and then master trade journaling. You see, that is why trading psychology consists of 60% of you becoming a consistent, profitable trader. Now let's go to the chart where I will teach you how to get your own working strategy with all the languages of the market we've learned so far in the pre-intermediate phase. If you're just seeing this video for the first time, please check the description box. You will get a link to the first video of how to learn the languages of the market, which is the link to the beginning of the pre-intermediate phase, and a link to the first video of the beginner phase. If you are, that is, if you are new to forex trading, yes, you need to start from the beginner phase. And also you will find the link to the next session in the description box of each session. That just it. Keep session, go through the description box. We always find the link to the next session in each of the session description box. Yes, that's just how it works. Now check the link of the description box. You get the link to the section of how to build your own trading strategy from the scratch. Profitability is the goal. See you inside.